It's time for the end of month housing market figures with Dr. Andrew Wilson and my housing market's latest statistics, which show there's been a surprise performer this month. It's probably not the state that you're expecting. We're going to break down what's happening to our apartment and housing markets around Australia. If you want to keep up to date with our housing markets, please click the subscribe button so that you can get our weekly Property Insider chats, and click the little bell icon too so we can inform you when a new show comes out. It wasn't that long ago, at the beginning of this year, 2024, that there were mixed predictions for our housing markets for the year ahead. Those who forecast a cut in interest rate, well, they got it wrong, and those who forecast a property market downturn due to mortgage stress from high interest rates, well, clearly they got it wrong as well. But interestingly, as I look back at these weekly Property Insider chats I've had with Dr. Andrew Wilson, his forecasts were pretty accurate, and our housing markets have slowly but steadily increased in value. But they've been very fragmented throughout the year, with some areas significantly outperforming others. So I'm looking forward to hearing the latest My Housing Market statistics for the end of October. Hi, Andrew.
Yeah, good day, Michael. And yes, it's been another positive year. In fact, remarkably similar in terms of the headline numbers to what we had last year overall. National house prices again up over October, and of course, what we do is we measure the quarterly number of house prices, and we take our median from that. Of course, we adjust it for compositional mix, which is the same methodology the ABS used in their series, but we take it on a month-to-month basis. So we look at the quarter ending the month, and we compare it with the previous month's quarter, if you understand what I mean. And that gives us a solid number of observations, and also shows us the trend on a month-to-month basis, so we can look a little bit more closely at that underlying trend. But again, house prices on the rise, national house prices up again over the quarter, over the October quarter compared to September, and that is the 20th rise, Michael, over the last 21 months. So a lot of consistency there, and those higher interest rates certainly haven't, that we started way back in May 2022, haven't slowed the housing market down at all, certainly over the past 2 years. And as you mentioned, we're going to have another positive year this year. So up until October, the national median house price is up 7.1% over the year compared to where it was the October quarter last year. And that's not too far away from the 8.3% we had last year overall, Michael. So we're going to get very close to recording the same result for annual price growth nationally that we did last year. So 2024 has been a bit of a repeat performer in terms of national prices growth. Of course, it is a little different when we drill down. This year has certainly, we've seen the contributions from what we call the big three in terms of price growth, and that's Brisbane, Adelaide and Perth, have charged ahead this year and are certainly contributing consistently towards that higher national house price. We see perhaps not quite as the strength in the monthly numbers coming out of those three capital cities, still rising. Brisbane up 0.9%, so the Brisbane market's over the month, and that's still a strong market. Adelaide up 0.1%. There are signs that Adelaide market may be just heading towards the peak of its cycle, and of course affordability drags strong markets down eventually, because unless we're getting lower interest rates or significantly higher incomes, buyers can't borrow more from the bank because we have those very strict lending requirements from banks. And that's a good thing because it gives us the barriers around our lending, and it means we really can't over borrow. But it does mean that there is a peak for cyclical growth, and I think Adelaide's starting to push towards that at the moment, although still growing. But when we look at the annual results for those three capital cities, Michael, Perth is up by 24.8% over the year to October. That's massive growth.
Yes,
in
it is,
anybody's
isn't it?
language.
Sure. And again, therefore, the prices have caught up. I know it's been driven by investors from the East Coast as well. It'll be interesting to see how they feel now that Perth prices are similar to Adelaide, Brisbane, and nudging up to Melbourne. Now, I do want to point out before we dig into your median house prices that there are some organisations out there saying that Melbourne house prices have now been overtaken by Brisbane, Adelaide and Perth, but they're mentioning dwelling prices while you break it down more correctly into house prices and apartment prices, Andrew.
Yes, and the other point is that other measures are just raw medians. So they take all the results and they just find the middle number. And of course, there is significant seasonality in house prices. And as the ABS uses and other data providers use, we do a mix adjusted methodology identical to the ABS. It actually came out of the Reserve Bank, which was they did a paper on this particular methodology. And what it does is it allows for those seasonal changes. So it actually gives us a more accurate middle point. And that's still showing the Melbourne median higher than Brisbane and Perth and Adelaide, but certainly closing in and you know, at the current rate of growth, it won't be too long. And the other reason we need to adjust these prices, these median models, is because Melbourne and Sydney have a very significant prestige market, upper end market, which is affected by seasonal issues, and certainly Brisbane, Perth, and Adelaide do not have the same prestige market impacts overall. So that's a sort of a technical explanation, Michael. We're not there yet, but we're certainly getting closer to having Brisbane overtake Melbourne and potentially Adelaide and maybe even Perth. But you know, having said that, I think that the point is that Melbourne remains a really good value market going forward. And it was interesting with the latest labour market data that we looked at. We've seen Melbourne's unemployment rate is still quite reasonable at 4.3%, but we've seen very, very strong jobs growth in Melbourne over the past year. So it's not all doom and gloom in that Melbourne market, and some early signs that those prestige markets in Melbourne, which have certainly been underperformers, have started to pick up over the mid part of the spring selling season, and that's what we expect. But still a way to go, obviously, to pick up. But I think Melbourne, you know, represents good value because there's really, other than confidence, there's really no significant issues affecting that Melbourne market. Its economy,
The underlying fundamentals are sound, aren't they?
Absolutely. And it's just confidence in the Melbourne market, you know, and, you know, we are starting
Lack
to
of
see
confidence in the government, in the local economy. People are getting annoyed by the government treating property investors, not just property owners, property investors in particular, but also owners as an ATM to tax us wherever they can.
Yeah, that's right, Michael. And of course, Melbourne was battered and bruised through COVID, and I think that's added to the sort of negative mindset. But rents are rising. Rents are now where they were in terms of comparisons with other capital cities, and still some upside there. So yields are quite high, particularly some of those unit suburbs, and that will attract investors, those higher yields and lower entry points, you know, in terms of purchasing. So there's plenty of upside there. And once the comparisons between rents start to even out, which they're doing in Melbourne compared to the other capitals that have had strong price growth, it means higher yields, and it means the potential for higher prices. And as we'll discuss just in a minute regarding the overall drivers for the market, I think that one of the kick-alongs for that Melbourne market will be lower interest rates if they come, but we can certainly be a little bit more positive in terms of the outlook for that perhaps occurring over the first part of next year. But I think one of the other interesting points that we're seeing in terms of emerging trends in the capital city markets is Hobart is starting to look a little bit stronger. And of course, Hobart has had quite an underachieving market or underperforming market over the past year in terms of prices growth. It's been quite consistent declines. But it looks like that Hobart market is starting to turn the corner now. But we shouldn't be surprised, Michael, because it tends to be a non-conforming market. When other capitals are rising, Hobart tends to go the other way. And when we're seeing some steadier results from the other capitals, Hobart starts to pick up. So we'll keep an eye on Hobart. But certainly the Canberra market is also another one which is showing perhaps a bit more of earlier signs of a revival there in Canberra. It too has had a year of underperformance. But overall, another positive a month for capital city house prices overall. Certainly the national house price continues to rise. The contributions are still very strong from Brisbane, Adelaide and Perth, although the growth rates there are starting to ease. But when we look at the annual results, they are really quite remarkable. And even when we look over the past 2 years, Michael, I think when we see that the Perth median house prices increased by 40% over the past 2 years,
Wow.
that is quite a remarkable result, and it's obviously at that level unsustainable going forward because we do reach those affordability barriers I discussed before. But Perth still has the highest incomes in the country, and but it also has the lowest prices of all the major capitals. So that's why those affordability advantages are still driving higher prices in Perth. And of course, we do remember that Perth went through nearly a decade of very flat activity in its housing markets following the end of the mining booms. So a little bit of catching up here also occurring in that Perth market. So, and as you said, Michael, plenty of investors are interested in those very strong price outcomes.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased.
In terms of units, Michael, the unit market was interesting. We saw unit prices tend to be a bit more volatile, but unit prices, national unit prices fell over September, but they've bounced back quite well over October. And because this is a weighted average, the national house price, unit price, there is no national house or unit, is based on a weighted average of the capital cities. And of course, particularly for units, that means Sydney and Melbourne are the most significant because they have most of the sales and listings for units, particularly Sydney. So we did see some good results there out of Melbourne and Sydney. Sydney up 0.4% over the month. Melbourne up strongly by 0.8% over the month. So as we mentioned, maybe those higher yields are starting to work, which is what we expect, those higher yields starting to work to higher prices, because of the attraction to investors. But strong results there. And interestingly, Brisbane and Adelaide were also up 0.8% over the month, and Canberra. So some good results there for unit prices, national unit prices, but they're still underperforming compared to houses, up by 5.8%, the national unit price over the year. But as we know, it can bounce around a little bit, but I just do think there's some more positive signs there for the prospects for unit price growth over the remainder of the year. And I think that when we look at the national figures, it's interesting to see that Brisbane is the standout for national unit price growth. Now, Adelaide and Perth have also had strong growth, but they tend to have much smaller unit markets. But Brisbane has a significant unit market, and it's up by 26.1% over the past year, very strong growth, and up by 40.5%, Michael, over the past 2 years. Brisbane unit prices. Now, it wasn't that long ago when we were talking about it, but there was plenty of media, plenty of commentators saying that Brisbane market was saturated with units and that it would remain oversupplied for,
decades. You took the words right out of my mouth. I remember those days there. Having said that, established units still are considerably below replacement cost. We know we're not building enough units. You regularly report building approvals. What we aren't able to get at the moment is enough new apartments being built to supply the requirements, and that's because the cost of construction, more
Yeah.
compliance and stricter building regulations, lack of supply of the right number of workers. All that means that the next round of apartments is going to cost a lot more. Considerably more than building a new house. Any time a crane's involved,
Yeah.
Andrew, I guess any time a union is involved,
Yeah.
it costs a lot more to build things.
Yeah. Very good points, Michael. Particularly in regard to the, I suppose, the union involvement, but I don't want to go into that. But nonetheless, I think that we've spoken a little bit about Melbourne today, and there's certainly been some good signs from the Victorian government in terms of trying to increase supply.
Yes.
They have slashed stamp duty for off-the-plan purchases, and and I mean slashed significant falls, and that's really going to attract, I would suggest, new purchases of new apartments, particularly. And as we said, that does reflect the lower price levels that Melbourne has. It will take some time to work through the system, of course, to try to rebalance supply and demand. And as you mentioned, a key question is, okay, it's going to create a lot of demand, but it is once again going to impact the supply side of the equation in terms of, not having enough materials and labour to match another sort of boom that we had with the previous government's home builder allowance, which pushed house building costs particularly, absolutely through the roof, because we couldn't match all that demand with supply. So we don't want to have a repeat of that in terms of, apartment building costs, which, as you said, Michael, are also, are typically higher anyway than house building costs. But at least, I guess, the government's recognising that, given its, the need for more supply, that it's being proactive. And there's also the Victorian government's been quite proactive in terms of its planning position as well. So these are good things, but maybe it's taking with one hand and giving away with another in terms of those. A lot of debate about the land tax, the
Yes.
land tax that was.
So, having said that, it's expensive to build apartments at the moment. The luxury end of the apartment market does seem to be financially viable for the bigger developers. And since the stamp duty cuts don't have a cap on them, in other words, it can happen at any level, beginners, investors, and the luxury end of the market, it's possible that downsizers who were reluctant to move from their home with too many bedrooms because of the stamp duty and costs. There's no capital gains tax if they move, but there was huge stamp duty costs. It could boost the luxury end of the apartment market as right sizes, as we like to call them now, Andrew, rather than downsizers, may change the way they live.
And that's a good thing because it frees up more
Yes.
property and larger properties that are larger and again, potentially for development, in those perhaps, middle and inner ring suburbs. So let's hope, they can get it right in terms of the planning, but we are certainly talking, some time before this affects what is still a very, very tight market in terms of the mismatch between supply and demand.
Well, clearly, immigration is continuing on. There's going to be a lot of rhetoric about housing as we come into an election year. So I guess we're going to be busy talking about this every week in our regular Property Insider chats. But it looks like we're going to finish 2024 on a positive note, Andrew.
Yeah, absolutely, Mike. And as you said, the drivers are still positive. We are starting to reach towards the peak of the price cycle in a number of markets. There's still some good value markets there, Melbourne and Canberra particularly, as we've discussed. Migration is still high, even though the government's ramped that down in terms of student numbers. We're not really seeing any improvement in supply coming through. We've seen some better news in terms of the rental market, which we've discussed. But I think that's more about social change because people are feeling rightly so excluded, particularly new tenants from the market because rents are so high and queues are so long in terms of prospective tenants. So decision making has changed. But, our economy is booming still. I think we can't argue against that. Very, very strong economy on all measures. Migration's still high. We're not building enough. And as I said, Michael, we're now starting to look like we're getting to the end of there's a light at the end of the tunnel in terms of inflation. And I think that we could start now realistically and logically discussing the prospects of lower interest rates over the first half of next year, probably towards the end of the first half of next year, if all goes well. And that typically doesn't happen, as we can see what's happening in the Middle East. But we've certainly had significant relief from the price of oil, which has been a big driver of higher inflation. If that holds up, then, and of course the government's given some easing of electricity prices, which has also created a much lower inflation outcome. If that continues on, then I think the Reserve Bank, having said the Reserve Bank will wait until there's a consistent period of lower inflation, which is fine, and it is looking at the quarterly data sets as well, to not the monthly data sets for that. So that's why it logically brings us up to perhaps the May meeting next year. But we can discuss inflation with the latest data being released next week.
Look forward to our chat next week, Andrew. Sorry, I'm just going to say that again, editor. I look forward to our chat again next week. Thanks, Andrew.
Thanks, Michael.